So we're going to give you a little bit of a break from slides. Lots of great slides, lots of great information. We're just going to have a conversation with longtime friend, investor, and someone who I have a lot of respect for. So you'll get the benefit of his perspective as I do and rely upon. And the question simply, and I think the stage was set by Dr. Timo and Sean's presentation, is are we at a turning point, or what does a turning point look like? So I'll open it there, and you better keep track of the time because Michel and I could go on forever.
Yeah, so like everybody, we don't have a crystal ball, but are we on a turning point? Around the turning point is what we think, but it depends where you are in the US, which sector you are in. That differs. We can see if you look, for example, at Odyssey, that a lot of the cap rates are still, if you look at transactions, way too low, and that you can see that value should be written down more for some. But there are sectors that are really at the bottom, and it would be a great time to step in. Yeah, it's difficult because is it one more quarter? Is it 3 more quarters? Because nobody wants to step in and then see write down after that. So we are thinking, should we invest at the moment, or should we wait another quarter, or maybe even longer? The fortunate thing on our side, which is also unfortunate, is that there is a denominator effect. So for a lot of pension fund, there is no allocation yet. So it gives us also some time to think a little bit over. But on the other hand, we could miss the opportunity to step in at the bottom and then make great returns, and we did it in the past. So it's still a little bit tricky at the moment where we are and what we are going to do, but yeah, we are somewhere around the bottom.
And then how closely do you track the movements and the sentiment around interest rates?
Very, because for us it's important. I mentioned denominator. What we saw in the last few years is that we got over-allocated basically in a few quarters from our target allocation, which is around 6.2% to over 9%. And then clients came to us, well, you're over-allocated, you should reduce your allocation, so sell, file for redemptions. And we did all of that, but it didn't move the needle, because in the real estate portfolio, or in a total portfolio of PGGM, real estate is only a small portion. So if we sell a couple of 100 million, that doesn't move the needle in a portfolio of over 200 billion. What really happened in the